Well, why don't you guys say that there's no audio like before? I've been speaking this entire time. I was saying that, okay, well, thank you guys for telling me like 10 minutes later. That's great. I was saying that this would be the most ideal area to open. Minimum condition is at least above this 6-3. Even though they could afford risk to have opened around 5-8, opening closer to above 6-6, ideally 6-8, gives us higher odds of getting some core retracements, which I think is going to help us mitigate risk for the early part of the week. Because if we can retrace back to here in the first half of the week, it's going to help us reduce risk for, thank you so much for the sub. It's going to help us reduce risk for the late week potential volatility for like Wednesday, Thursday, Friday. So those were part of the weekly conditions here. So some of the weekly conditions I just put out were ideally open above 6-7-5-8, 6-7-6-3 at a minimum, just to avoid major volatility. Opening ranges above 6-7, 6-6, 6-7, 6-8 would be best for odds for core breaks. So it's not necessarily required, but this would give us the best odds. So this puts odds, guys, now of 68-20s in play. This is, thank you so much. Current support still is going to be near that 6744, 6749, with obviously that 6739 to 41 area being extremely calculated that they held on Thursday. So like this was a really calculated area that they held down here. Okay, this is basically like the 34 point range. So right now they're opening at the 66, 68 point range, if that makes sense. So this, I think this will help our odds. Like them sustaining here and then also opening here. Okay, like in this area here, this should help our odds opening at this core range. So in terms of trying to not only get to the zone, but potentially get to this area here. Okay, so I would say that odds are favorable now. It's not entirely required for them to get to this area here early week, but at the very least sustain early in the session, and at least try getting back to these core ranges overnight, like 6-7-7-1, 7-4, the retest of 7-9. Since we did test 7-9 on Friday's session, I think we have pretty decent odds of getting back to the 8-1, 8-4, 8-8 area. What do you guys think? This would be like at a minimum. So this was part of the conditions to start the week, is if they can give us that good core open, we have a pretty decent odd of getting, so 6-7, 6-8 open implies 68-20s for the week. Overnight conditions with this type of opening. Well, we did get a good core open, so that's good opening range. Would be to retrace 6-7-7-8, 6-7-7-9, and try retesting upper core ranges near 6-7-8-1, 6-7-8-4 with odds of zone entry to 6-7-8-8. Okay, so in terms of sustainment, honestly, I would just prefer that they avoid the means entirely. If they're going to open at core, I would rather they don't go back to the 50s. Does that make sense? Like at this point, since they struggled here Friday at 350, remember how they failed 6-8, 6-6? And this was our condition on Friday before I ended the stream, like to hold 6-6, and then they stalled. I think at this point, we basically want to just completely avoid going back beneath 6-6. Let me know if that makes sense, guys. We want to probably avoid this. Otherwise, that's going to give us pretty low odds of getting these upper retest of like the 8-1, 8-4, 8-8, 8-6 range. Okay? Does that make sense? Kind of like in here. These weren't bad holds from Friday, but these are basically just them holding the means. The means being like 5-1, 5-2. So they're kind of in the middle here. Do you see this? Do you guys see how this is like the mid-range at these core areas here? Because this is technically our risk area near 5-1. And our reward area is around 8-8. So I would imagine that this is probably 50% of like our max risk reward. Yeah, it is. Okay, so this is giving us pretty good odds of getting there. I don't know if this helps you guys, but this should give you guys at least an outline of your risk to reward ratios. Okay, and that makes total sense because once they break this 7576 overhead, that's the 66% range. Okay, and once they get back above 6869, that'll be 75 to 78.6. So I think the condition is going to be that they just avoid this area entirely. I don't want them to come back here. Okay, so we want to stay above 6.6, I think. Let me know if that makes sense. If that makes sense, then we can just set this as the condition. So what should we make this? Not yellow. I don't know. Maybe blue. We want to avoid this area here. Okay. And retrace this area here. Yep, I can. Ideal to avoid the means now since we've got the ideal open. So I don't want us back beneath 6764, 6766, and retrace 67, 78, 67, 8167, 84 areas. Okay? Otherwise, that risk is going to stay high. That's kind of the range that we're working with right now. And I would imagine that this upside overhead range, like if we looked at it from here to here, the 75% area should align with 8.8. Yeah, it does. Do you see that? So that'll give us really good odds of getting that upside break. In terms of wider range support, I'd probably set this to like the 3.9 or 4.1. This is just if it helps you guys, okay? Maybe set it to like 6.738 or something like that. This should help guide you guys in terms of like, this is basically like a, because our support was around 3.637. That's what I didn't want to break last week, right? Was this 3.637 area? So if you set that to 3.6 and you retrace this from this range in here, it would make sense that the opening area would be around this 6.8 mark. Does that make sense? So in other words, if you don't retract back here, you could easily still come back here. So if you don't get back to these areas here, it puts you at a risk of coming back to this area here. So that's kind of the risk we're facing because this is more of like a neutral zone, okay? So at a minimum, you'd be back at risk of here with the potential risk of heading back to here, okay? This would give you an odd of coming back and retesting here. That's kind of like your risk to reward ratios. And I think that's pretty straightforward. So, and if you're able to sustain this range in here, hold on. If you're able to completely avoid coming back to this area in here, it should be aligned with like the 6820 range, like probably close to this area in here, especially off like 8.8. So if we put this closer to 8.8, that should be 6620. Yeah, it is. Okay, that's the same thing as holding 5.6, 5.8. If we look at this in terms of holding closer to the means, so like above 6.6, this could give us odds of the full zone. Does that make sense? So a 6.6 hold, guys, gives us odds of the full zone. That's full core ranges. Core ranges are between 68.20 to 68.32. So that would basically be a core to core move. Does that make sense? I need you guys to try fully understanding this, whereas 6.8 is going to be aligned with the 3.2, which is the top of the zone. So basically, in other words, of 67, 68 open, you guys, is the same thing as a 68.32 odd, okay? In terms of like a zone range. Let me know if this makes sense to you guys, because this would basically be like this area here could push you all the way through the zone. and the zone expansions were on the report. I kind of limited it to 26, but technically 3-1, 3-2 is still in play. I'll update that midweek just based on what kind of ranges we get. So, okay, I think that's good enough for like a very quick recap to start the week. We'll see where they end up holding and closing. Lift. I'll look at this, and then I do have to go, guys. I'm babysitting my niece. The lift looks like it's stuck in inside ranges on like multiple frames. The only frame that isn't is this one here for the 7th, so maybe you'd have to see some progressive price action on the 6th. That's the only way it could avoid staying stuck inside. In terms of progressive action, I mean, the annual range is flagging. I'd probably look at maybe like the 10-month ranges. A lot of these charts are trading off 10 to 11-month ranges more so than they are off annual ranges. Okay, so you could probably try looking at those. I just want to see, or like the midpoints. Yeah, those would probably be some calculated midpoints here. So your conditions are pretty easy. Sustain 21, 21.34, and break 23. It's basically stuck right in the middle here of some annual range. And if you think about if you're trading off a 10-month chart, you're trading in month 10. Does that make sense from a time perspective? It's October. So you're basically retesting your annual interval off a 10-month basis. I don't know if you guys ever think of trading like that, but it makes so much sense like that. Like when you're testing something, if you're applying a 10-month chart, it probably makes sense that you want to be watching that 10-month range in the 10th month of the calendar year. Do you know what I mean? And this is probably where it's sticking here. So maybe if you adjust this to the actual point, it needs to get back over like 22. Yeah, probably like here. This is where it's stuck. Do you see that? So it has to break one end here from last December. I'm not sure what the dates were, but these are from November 2020 and January 2020. And if you look at a 5-month, that's like half the range. You might be able to get like more confined dates, so maybe back in June. Let's see. This was kind of the reversal that happened here. This was the uptrend break. So basically, maybe if they sustain these areas here, you could get some movements back to this range in here. Could be the idea, I guess. Let's just see what kind of range this would give. Otherwise, this is kind of the risk that you're facing right here. This is probably, I would bet you money, almost the same range as the gap beneath or something. So like 6.14 to 7.42. Is probably going to be the differential in like the range break you could get above here. Yeah, that's pretty close. Do you see that? So that's your overhead basically. And it seems like like if that runs through November and like this was June, I don't know, what are your ranges from back in October here? It's interesting too, because if you look at this, you see how it was trading sideways between end of September through October 5th and 6th, 7th, and then right now it's currently stuck in some inside ranges until minimum the 7th. So you see how it tried breaking up right here? And then there's also some flips around the 12th and 13th coming up where you see how it broke structure down here. So from a time perspective, it could be a similar like objective, and it seems like it's around that 6 to 7 point ranges. Like that, those seem pretty common here. Do you see that? Like in terms of like the kind of range, I guess it breaks when and if it does break. So you can maybe gauge something similar beneath. I guess if this were to break back beneath here, you don't want to be at like too much risk because that's probably going to take you back to your gap ranges. Let's see. Yeah, it would. Do you see that? Where there's like this massive gap right here. So that's kind of like your risk. Look, these are like 7 to, that's your risk with this massive gap from their November earnings of last year. And so it's probably aligning with current earnings for November 5th. This gap is correlated to this break. So if you don't break down, that's the break you'd get. It's around 7 points. Roughly. Okay, I have to sign off, guys, because I have to watch my niece. So far ES is on track in terms of testing. That's a perfect open. We want to see these breaks overnight. We'll see where we're trading by the first hour. If they're already above 7.8, 7.9 by the first hour, I don't see how we can't get to our zone overnight. And we still have overhead around the 05, 10, 8, 12. So I would say that the neutral zone still has some overhead this week. And considering they made it above 9.9 on Friday, they already entered the neutral range. So those odds are not that low. Plus, based on that macro calendar I sent you guys, Monday, Tuesday had the best odds for upside, right, for the week. So, I mean, if they give us early week upside, maybe extend our zone a little bit, it'll help us in terms of sustainment later in the week in case we see some, I don't know, like some volatility back down, like second half of the week or something. Like maybe back to OR, back to 5.8, back to 6.6, maybe back to the channel. We can still afford heading back to the channel this week though, especially considering they didn't backtest the whole channel. So it's kind of nice of them that they held 6.738, 6.741, because it kind of leaves that room beneath 4.1, above 3.233. Okay. Major areas to sustain this week are those 67.20s. And that aligns with the core to core open. So the 20s down here, the 70s here align with the 20s and 30s up here. Okay, I will see you guys probably, I'll post a little bit maybe later.